Following investor excitement over spot Bitcoin ETF filings by BlackRock and WisdomTree and Invesco and everyone else, it seems, Bitcoin has kind of stayed flat over the past few days. It's hovering around the $30,000 mark. That might not be by accident. Joining us now to discuss is Tasty Crypto head Ryan Grace. It's a new title, Ryan, right? Welcome.
Hey, good morning. Yeah, we have changed some names around with our corporate structure, so things are moving, but it's nice to see you.
Good seeing you. I was going to call you Tasty Crypto, head of crypto, but then I was just like, no, that's not. You're actually the head of Tasty Crypto head.
Tasty Digital Assets.
It's kind of a very weird. Yeah.
We'll have to work on that.
Yeah. Get in touch with marketing there. Crypto spring, right? Green shoots coming out of the ground. Green shoots all over the candlesticks. What's going on? What are you seeing happening here?
Yeah, it feels a lot better. It's encouraging, I think, at this point. That said, I'm still not convinced that we've completely decoupled from some of those more macro drivers. Whether that's monetary policy, it's the idea that the economy is slowing. I don't think we're completely out of the woods just yet. But given the recent news, let's call it the institutional stamp of approval, super encouraging. Would love to see a break out of this range. But just given where we are this year, given how the market has been trading, I think anything in the short term that might be related to another Fed hike or maybe inflation isn't coming down as fast as we thought or we would like it to, I see those now more as buying opportunities. You have to respect the range. At Tasty, we look at things through the lens of the derivatives markets, through implied volatility. And with about a 60% vol here, you've got kind of a 1 week range that you could see maybe 27.5. So you still trade that 25 to 30 range for now. But I think that you look at some of these pullbacks, if you get them, as opportunities, because it is a lot more encouraging given the institutional stamp of approval we've seen.
We have this $30,000 level here, and that's significant because we have a lot of puts and really a lot of calls hanging around there that expire tomorrow. Tomorrow's the big day, end of quarter, end of half, end of the month. Everybody's excited. I know I've marked my calendars for months in advance for tomorrow. But this is, significant. Is that what's keeping prices, at least for now, at that, you have like $5 billion or so on Deribit hanging out there at the 30,000, in notional there. Is that what's keeping everyone around this level for now? And do things get exciting after Friday?
Yeah, I think there's a potential for the market to move a little bit more after Friday. You see a similar dynamic in traditional markets when you look at derivatives positioning, you look at option positioning or those expirations. Granted, those markets are much, much bigger than what we see in the derivatives market here in crypto or with Bitcoin. But there's something to that, not to necessarily get into the weeds with some of the gamma dynamics or how dealers might hedge that or where those positions are. It does have an impact. So it's possible we could see a little bit more volatility. We could see kind of a quote unquote unpinning after we get through this expiration. But I think you're seeing 30,000 because of what's developed in the market recently over the last couple of weeks. People are encouraged. I think you have some element to trying to front run the possibility of those flows that you would see subsequently from an ETF approval. A lot of that does, again, hinge on the approval that the industry has not been able to get yet. But should you see that, I think it's over the kind of the medium term, it's off to the races. And that's why I think you're seeing buyers step in here when you get these back.
Economists have been calling for a recession for a few years now. It seems like that call is getting closer and closer. Some economists are saying by the end of the year, some are saying by Q1 next year. Does that change your outlook here on Bitcoin, which it sounds like is pretty positive?
Yeah, my outlook's definitely positive, but I don't think that you can ignore what we're seeing when we look at the yield curve. What we are seeing when we look at some indicators of what's happening in the economy, there definitely are some concerns. I think you have to respect that. That said, very difficult to time. I look at 2s, 10s, look at the yield curve, for example. It's extremely inverted, close to one of the most or the largest inversions on record. Now, that has been the majority of the time, it's been a pretty good indication that there's a recession coming. That said, it's a really wide spread, 6 months to 24 months. We're about a year in since we first were inverted, and we kind of flirted with recession, technically, I suppose, when you look at GDP quarter over quarter. But tough to say. So that still kind of weighs on this. It's in the back of my mind. I think interest rate hikes here out of the Fed, whether you get another one in July, which looks like what the market's pricing in, probably matter less. Inflation is coming down, but I don't think that crypto is immune from, a sort of environment where you would see a very strong dollar, where you would see just generally a risk-off kind of sentiment in the markets. And given just how quickly we've increased interest rates here in the United States and really globally as well, when you look at global central banks, there still is that monetary policy lag. I don't think we've necessarily seen it show up. We haven't seen financial conditions tighten to the extent that they might after we're done with rate hikes. And again, that kind of coincides with that same time period that we've seen with interest rate yield curve inversions, 6 to 24 months. So we just haven't seen it yet. So I think you have to be aware of that.
Nonetheless, I mean, we are hearing that banks are tightening their lending policies. They're making it harder. There's fewer dollars sloshing around in the economy. It's like 10% down. M1 is 10% down. We're seeing, as you said, the inverted yield curve. I mean, everything's pointing to a pretty lousy recession coming up. And do you think that will, this is kind of going to be one of the first major, this is definitely the first time we've had Bitcoin and other cryptocurrencies go through a period of real serious tightening of money supply, et cetera. Is that equation underestimated, do you think? Do you think that crypto markets aren't necessarily counting in the fact that it's not the same as it was? Our money supply is down over the past year. Do you think that they're not really thinking it through?
Yeah, I don't think it's very forward-looking in that sense, but I would apply the same view to what we're seeing in the equity markets. We've seen a risk-on rally here for one reason or another. And yes, I do think that if we should see a continued slowing in the economy, coupled with where we are with interest rates here, then you likely will see some short-term pain. I tend to view that as an opportunity because I think on the other side of that, and maybe this is the larger driver, when you think about the flows, we can talk about the ETF, but when you really think about the liquidity perspective, if we do get into that situation, well, the Federal Reserve and all the global central banks have that playbook. And I find it really hard to believe that we are done stimulating, that we're done devaluing currencies, fiat currencies globally. I think this trend continues, and that's really what drives Bitcoin adoption as a, let's say an inflation hedge or debasement hedge, and just largely crypto over time in terms of the price action. I think it's when the Fed puts the pedal to the floor again, and you'll see that should things get bad enough in the economy.
Ryan, thanks so much for joining us this morning.
Thanks for having me.